Well, hey, everybody. Do you want to be able to trade zero DTE options, but you don't have 25,000 in your account or you don't want the pattern day trader designation? Well, I'm going to share with you in this video a little known trick that you can use that will allow you to do all the day trades you want without being charged for your day trades. All right? Watch this video. All right? Let's get into it. Again, let me refresh us. We use it as a way to mitigate, to lock in our profits or mitigate the losses. We're talking about some ones, if you're doing we talked about doing multiple days, which you kind of didn't need a PT hack for multiple days because you were saving day trades, right? But let's talk real quick. I'm going to give us like what do we do? Let me see if I can get us a chart or something open. While this is opening, I may just talk. But so you've got stocks, the day is going, it's opened up, SPX is starting to climb and do its thing, right? You do your thing and you believe it's going to keep going up at least enough for you to get into. If it's going up like this and you believe it's going to go up enough for you to grab hold to the second side, okay, your first step here is going to be which? A put credit spread or a call credit spread? Which one are you going to do first?
Put.
Yes, you're going to do a put credit spread first because you're believing that price is going to continue to go up higher. Let's talk real quick about where you would do your put credit spread. You can do it at the money or you can do it below support or at or below support. The differences between these two is this. If you do it closer to at the money, you're going to have a little bit easier time, maybe even a lot of bit easier time getting your put credit, getting your call credit spread filled. Yeah, getting the other side filled if you do it closer to at the money. The drawback to doing it at the money is if the turns back, you're kind of closer to the line of fire. If you do it below support, then your trade, this put credit spread could potentially stand on its own because you're doing it in a place where it could normally be below support anyway. At the money is probably going to get your second side filled quicker. This is what Saida has found out too, is that probably get filled quicker. But if you're below support, it may give you a little bit more, calmness because sometimes we get very nervous. And I'm saying we, the collective, we, not just we, y'all, I'm talking about we, me too, get real nervous working at the money, especially when you're dealing with SPX, because that mug will turn back and you'll be looking like, where are you going? Where are you going with my money? Okay. After you do your put credit spread, your second thing you're going to do then is you're going to put on your call credit spread. Put credit spread. Let's say, for example, your put credit spread is at 3,400, 3,405. Let's say that's the strikes you have, and you take in, if you're at the money, you're probably going to take in 230 or something like that. It may be 200. You're going to take in about that much. 230. Okay, what you need to have in this calculation, you're taking in 230 in premiums. What's your max loss? The question.
Is it 270?
270.
270.
270 is your max loss. When you're figuring your next side, that next side needs to be more than your max loss in order for it to overcome, or that gives you the profits. So when you put in your call credit spread, price needs to be going up. It needs to be going into that zone, if not through the zone, because you want to call credit spread at the same place, 3,400, 3,405, exact same numbers, go right across the option chain, and you want premiums greater than 2.70. You want bigger than 2.70 because whatever's over is where you're going to get your money. So let's say, for example, you pick premiums of 300 or $3. You pick premiums of $3, then your profit will be 300 minus 270, which is $30. That means you're locking in $30. 300 minus the 270 gives you that profit. It has to be higher than the stop loss. This is the one that's key. Your premium for the second side has to be above the max loss of the first side in order to be a profit. If it's lower than that, let's say you end up with a premium of 240. Then you end up with a premium of 240, or shoot, when it's not going the way you want it feel like it don't even get nowhere near your little numbers. Let's say you end up with a premium of 200. If you're at a premium of 200, then your loss here, you're locking in a loss of 270 minus 200, which is a $70 loss. You're locking in a loss that's less than the $500 loss if your trade is breached. It's hard to lock in a loss though, especially if it's early in the day, because you're then like, what if it does what I want it to do? And it might, and it might not. So that's the difference there, right? Whatever you get on the second entry, you either add or subtract that from the max loss of the first entry. That's what's going to tell you whether you got a profit or a loss that you're locking in. And I say locking in, once you put both those sides on, that trade is complete. Once they're both on, you leave them alone. Even though one of them is going to look really, really green, the other one is not. So don't feel like, oh, I see a bunch of profit on this one. Yes, you do. But if you take it off, then the other one stands alone, and that's going to be a max loss. One of these trades is going to be a max loss. That at the end of the day, one's going to be a max loss, one's going to be a max profit. Based on what you got going as you're locking in prices, you're going to get that. So once you put these both these sides on, you don't touch them. You leave them on to run the rest of the day, and you go on to other things. If you want to go do more credit spreads or put credit spreads separate, then that's fine. Watch your strikes though, because if you double up on those strikes, you could potentially cancel off something and cause a day trade, or inadvertently cause a day trade. The key to the PDT hack is making sure you get that first side right. That first side is crucial. You got to get the first side. And if you get on the first side, if you enter the first side and it doesn't do what you want it to do, then turn it off quickly by doing the other side real quick or whatever. Don't spend time on it, whether that's a small loss or a small profit, which is probably a small loss if it's not going the way you want. Go ahead and lock that trade down and leave it and move on to the next one. But if you don't want to use a day trade, use the PDT hack to lock in wherever it is, and that basically shuts that trade off, and then you can focus on something else. Hey, if you want to lean in a little bit more on the zero DTE strategies with SPX and XSP, then go ahead and check out the training. I'll put the link in the description, but I've got a training that will help you to really see the best times to enter these credit spread trades for zero DTE, depending on what fits your life. For SPX, XSP, looking for at least 10% profits, I've got a training for you. Look in the description and find the link. All right. Talk to you later. Bye. And something else could be more SPX trades. Now you can go on to maybe you can put it on the right side. You can get in on the right first entry of SPX or something like that. But don't, if you find out early because usually PDT hacks are getting put on earlier in the day. If you find out pretty quick that this is not going to, it don't look like it's going to go the way you want it to go, then, you might want to go ahead and put the PDT hack on where it is and then focus on what you can do that's going to be something profitable to mitigate the money that you maybe have locked in that loss. You can spend the rest of the day focusing on mitigating that loss versus hoping the first trade is going to go right.
I have been testing it on demand. Yep. And I've been getting some very wonky figures.
Okay.
So I'm wondering if I should do it in the sim instead, if I might be able to get better numbers.
Right. So remember, when you're testing On demand, you're not testing on demand for money to confirm the money. You're testing to confirm the strategy. Because the money on demand may not be the same as what you will get. I know one thing happens. It feels way too fast in on demand. That second side feels like, boom, you're like, well, how did we get here so quick? In real life, it doesn't feel that. It doesn't feel, the orders don't feel that fast. And then you're sitting there going, oh, this is easy enough. The orders, the second side feels so quick. And sometimes you can be doing a PDT hack and it take half a day for the second side to feel. That's sorry, I didn't mean to do that. Yep.
Alyssa, Jamie come up with this way where you did a box. I was trying to find my notes, and that's how I learned.
We did. Let me do that box.
Yeah, it's like my goal. If my goal was like to get $50, I'm looking for it.
I remember the box. So if you did, let's say you did the put credit spread side first, and you took in 100, let me do 125, some numbers that are not round. This was your profit and this was your loss. So 125 would be, the loss would be what, 375? This was your first entry, and then your second entry would be your CCS. And these two PCS, CCS can switch. This is interchangeable. You don't always have to do the PCS first. You can do either one first, but the box still works. So then from here, you want to, this premium here has to be, you need to add, let's say if you're adding $50, then this needs to be $425, right? Which would mean this would be 75. So this is, let me change the color so we can see what I did. This is basically a plus $50 of profit. Okay. From the max loss, you need to add whatever you want for your profit, which many times $25 is, or $30 is much easier to achieve than trying to go 50, trying to go too far. But you want that to be, this is what you would put in the premium box for that second trade. If you're trying to get $50, you're going to put 4.25 in the limit box for that to pick up. But like I said, they generally don't pick up too quick. On demand will have you, thinking that everything picks up fast, and then you'll realize that they don't really pick up as fast as you think in real life. But you can run in your sim. I think sim is going to be a little closer to the real life as far as picking up and stuff goes. But I think even in the sim, it picks up a little faster than real life, but it doesn't pick up as fast as on demand. In on demand, there's nobody to fight with as far as premiums go. Let me go and switch over so we can look and see what the spread deltas look like, because you're not going to have, you need the value of the spread to move that much. That makes sense? Well, hey, I want to thank you for hanging out with us. Thank you for watching the video. Please sure to like and subscribe. Subscribe to the channel. Click the notification bell so you can make sure you get notified every time I post any new content. And we'd love to see you coming over and hanging out with us. Not just the leg, because we're not doing it. If you're doing the spread, you're doing the whole spread needs to move based on that delta and the delta of a spread. If we're looking here, I'm on SPX. So, you got deltas on your individual numbers here. This is on just particular leg. But when you're looking at the vertical, you really need the delta on the spread. And at the money, the delta on this spread looks like it's 7 or some change, 6, right? 5, 4, and 3. You need, and usually when we're picking strikes, we're not looking at the spread delta. We're looking at the delta on the individual legs. But when you're looking for how much money you need to get yourself to $25, if you got this one here, the 44, 45, 50, that's the one you get, and you got a 7 delta, but you're looking for $35 in premiums, then you need to take this 7 delta and multiply. It's got to move $5 in price in order for you to get to $35 of profit. Yeah, because 7 times 5 is 35. So if you had a 7 delta for the spread, because remember, we're talking about the worth of the spread, not just the worth of a single leg. Then you got 7 delta. It's got to move $5. in order for you to get a $35 to have $35 of profit, maybe for the other side. And then you have to look at over here because you're really looking, if you've entered on the put side, right, you're looking for the delta on the call side to get you what you want. So the delta should be close. If you're using delta as your thought for when how much it needs to move in order to get you the money you want, then you got to look at the delta of the spread, not just the delta of the leg. That's going deep. That lets you know, like, if there's a price, because sometimes we'll see big candles and we're like, oh, it's moving on up. My trade ought to feel. And you're like, oh, it ain't even acting like it want to get to my price. Where are we going? Why are we not going? Again, if you're going to, fool up with SPX in the merging, you need to have a PDT hack in mind. Unless you're very sure it's not going to turn back on you, be ready to use your PDT hack. Start off with the plan. If you don't have the time or ability to watch the day to make sure your PDT hack gets filled and all that to go with that, then you may want to wait until later in the trading day and go through our normal strategy, which is Saida has the plus minus 30 at 1:30-ish. The plus minus 30 at 1:30. You can do the plus minus 30 in the afternoon, or wait and do the 2:30, 3 o'clock power hour that we did all the time. If you want to still get some benefit out of SPX, there's ways to do it. There's levels to this. If you're going to do it in the morning, plan to use a PDT hack. You're going to need something to give you some comfort that your trade is doing its thing and you're not having to watch over it and worry over it all day. Because I have found that in our community, we busy in here. Some of us got jobs, we got 9-to-5s, we've got other interests of things. Even if you're trading quote unquote full time, then plan to do a PDT hack in the morning. If you know you don't have the day to wait for it to do its thing, then you need to maybe wait till a time later in the day when you are available to give the trade of SPX your focus. All right, we got afternoon strategies. We've got the plus minus 30 at the 1:30, or you can wait till 2:30, however we do our regular power hour strategy, or into 3 o'clock. I've thought about waiting till like at least past the 10 o'clock turnaround to see what happens, because those first couple of candles can sometimes, have you fooled. This is a 5-minute chart here that we're looking at. I was just getting ready to lead us into the breakout strategy we've talked about a couple of times. And we've talked about it as a buyer. So this was yesterday. So we were talking about the breakout strategy as buyers. And with the breakout strategy, you're looking at the first 15-minute candle, which would have been this one. Okay, where did you go? Oh, I switched over to scan. That wasn't on purpose. Which would have been this first candle, right? And then this is a 15-minute. You put a line on the top and the bottom of the first 15-minute candle. And when it breaks out of that candle, then you either put on a call or a put. You do either a call or a put after that. I've done the call or put on XSP. Now, the drawback to XSP as a buyer, it's got daily expirations. So it needs to pop, and you need to be done with it. So, because if you wait till later in the day, your premiums are eating up the other direction. Even if it's going up like this one actually is, you're also fighting theta. All of this time, you're still fighting theta. So even though it's moving in the direction you want it to be moving, the price action is being chewed up by theta getting into the afternoon. So then if it's going to do it, if you do it as a buyer, it needs to pop really early. Like you need to get some candles up in here that are going to let you grab your premiums pretty quick, like 5-10 minutes, and then you're out. The price didn't move enough for it to get onto something good yesterday. So that's as a buyer. I found that, as a buyer, maybe not so much. Let's talk about it as a seller though. How would we use the breakout strategy as a seller. You could say, okay, we're up here. It's done this first candle. Once it breaks out of that, which would have been this candle, then you would put on a PCS. I feel like you'd want to go below here. It would be safer to do it down here. You're trading the breakout using the PDT hack as a seller. So you're doing two things. You've got the breakout going, which means you're just trying to get in at the money. You got the breakout at the money, and your second side, or your, PDT hack, is what you're going to put on as your second thing, because you're trading thinking that now that it's moving up, that it's going to continue to move up, and you do the PDT hack with that in mind. In this case, the breakout would have been, your first entry would have been a put credit spread, and your second entry would have been a call credit spread, and you're getting about $25 or $30 on this profit. So you're not really wanting it to go super far. And on the call credit spread, you're not fighting. Actually, the theta is working for you. It's not working against you. I like the idea of going below the gap too, but if you're trading the breakout, this is a different strategy. So you're trading the breakout strategy, or you could do your first entry could be down here at number one. It still would be a PCS, but you would do it at this price down here, which is what, 44.25 or something like that. And then let your CCS be above that. I could see it happening. You the only way you really would do this breakout as a seller is you're going to need to do the PDT hack unless you got over 25,000, because you could potentially, if you're only trying to catch a little bit of a quote unquote pop, then you need to plan to put on the PDT hack. I would say you're going to get better premiums up here at the top of the breakout candle. You're going to get better premiums up here, but it could be also a little scary, especially when if the price starts coming back towards it a little bit. But notice the top of this first candle almost acted as support for when it came back to it. The top of that candle was support, and it went on up, back up from there. That's interesting. Let's see what a previous day looks like. See what a previous day could possibly look like. This one here was a breakout a little bit, but it wouldn't have broken out until 11:30, and it didn't really do much. And if you did this, the PCS at the top of this, you would have been still at the midst of. It would have worked out for the end of the day, but it wouldn't have worked as a breakout per se. This one here, this is Wednesday, I think. No, this might be Thursday. Here's your lines for that one. It broke out going up and then came back down to it again, operated like support. It stayed above there. So you would have potentially gotten your other side put on during this pop. If you did XSP at the money as a credit spread, though, you're going to end up, you could potentially, let's go look real quick at what XSP looks like as a spread at the money, what kind of premiums you take in at the money. You take in about $30 at the money if it's going in your direction. So if you did 30, you could take in 30. Actually, that says 46, so it's not even 30, it's more than that. So if let's say you took in 30 there and you locked in the other side for, $95 or $90, you can lock in 20. That means you need to be at the money when you enter the first one. Your first entry would then need to be at the money, like you wouldn't be able to really get too far away from at the money, because then there's not going to be as much meat on the bone, as they say. I think the breakout can be done though on SPX. But you're going to want to, that's the question that we asked about, would you get your strikes at the top of the breakout candle or the bottom of the breakout candle? I think that's an important piece of information, because you're going to get different premiums at different places. So I think that's of interest. If doing the breakout with the PDT hack is of interest to you.